Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Very close to the day's low. That's where the Nifty is at currently. The mid-caps, after outperforming the index, is now underperforming. So we're starting Midcap Radar with the mid-cap index down around 0.5% and a lot of moving parts in the markets ahead of the budget.
That's right. It's the last trading session before the budget on a Sunday. Remember, markets will be open on Sunday. The Nifty metal index is the one that's under significant pressure on the back of the metal meltdown that we've seen overnight. But a lot lined up on the show, important corporate conversations as well. Let's start off with the top headlines. Stocks trade soft but ranged ahead of the union budget presentation on Sunday. Metals, energies and IT are the big drags, while healthcare and industrial eke out gains.
Nippon Life India AMC surges with strong quarter and market share gains. Revenues and operating profit witness steady growth.
Blue Star gains as management guides for FY27 margin at 8.5%. Expects a strong Q4 for room AC, CAC as well as commercial refrigerant segments.
Syrma SGS Technology fires up in trade after a strong set of Q3 earnings. Revenue increased 45% and company witnessed strong growth across segments. Okay, all right, those are the top headlines that we are tracking. As I pointed out earlier, it's the mid-caps which are underperforming today. Nifty is underperforming on the back of the fall that we are seeing in metal index today. Look at that. Across the board, there's been a sharp fall in the last couple of minutes. And it is courtesy with what's happening in the metals pack. That index is down 5% as we speak. But a lot of earnings which are trickling in. And that is exactly something that we are going to be tracking today. But let's get to the first one. That's MTAR Technology. It is up 7% in trade today after its Q3 earnings. The company's EBITDA and profit beat street estimates, and the company has said that they expect margin improvement sequentially over the coming quarters. Let's welcome Parvat Srinivas Reddy, the MD of the company, to understand the outlook of the business going forward. Mr. Reddy, good afternoon. Thank you so much for joining in today. Well, it's been a strong quarter, and that's what the stock price is suggesting as well, because the last year you did see some sort of weakness that came by. Are you getting an indication of what FY26 would end with? You had indicated a 30 to 35% growth. Do you think you can actually surpass that guidance? And what's the indication for FY27? Any initial signals that you're getting?
As we said earlier, we will achieve the growth, what we mentioned earlier, 30-35%. Q4 as well will be a strong quarter for us. And FY27, we're looking at about 50% revenue growth compared to FY26. So that's again a sizable percentage that we're looking at, purely based on strong order book and the kind of feedback we have with the customers who are involved in the technology sector. So we're right on track with what we have said.
Okay, you spoke about growth. You said that over 50% growth on a strong base of FY26 for FY27. What is the guidance that you're giving as far as EBITDA margins are concerned? Can we expect it to be above the 25% range?
For sure, if you can look at the EBITDA margins for Q3 is at 23%. So these margins are going to sequentially improve. And we're looking at the next year. This year, as we said, it will be averaging about 21%, but next year, the EBITDA margins would be up beyond 24 to 25% range.
24 to 25% is what you're looking at margins from next year. Give us some triggers that would lead to that margin expansion. Of course, you're talking about clean energy as being a big segment that is contributing. Defense is the other one. Give us a sense of the order book. Where are you getting all these orders coming in from?
The order book, as I said, we're going to close it around 2,800 crores this year. After achieving revenues of slightly above 900 crores for the financial year. And the orders are trickling in from clean energy, from nuclear, aerospace, all these divisions. So we're expecting close to about 700 crores of orders trickling in this quarter itself. And the margins for next year, the revenues, what we're looking at, 50% revenue growth is purely based on the orders that we are booking by the end of the year, and also we will be having a very strong order book moving forward as well.
Okay, Mr. Reddy, one thing that the street looks very closely at is the fortunes of Bloom Energy. One of your top clients. Overnight, that particular stock was higher by almost 7.5% on the back of a large deal that they had announced. Would you have any role to play in that particular deal? And given the bright prospects that Bloom has alluded to, in FY27, can you give us a sense of where you will end the order book at and what are the order inflows you expect to receive?
No, it's, to be frank with you, it's not about the orders anymore. It's about how much we can execute. That's where we are right now.
Okay.
So we are going for the expansion plans. By end of this year, we are going to commission additional capacity. Then again, we're going for another expansion, which will commission by December of next year. So it all depends on how much we can execute as far as the fuel cells is concerned.
So what is the capex you have lined up and how will you fund the capex?
We have the capex lined up for 12,000 capacity. We're at 8,000 right now. By March, it's about 40 crores an hour. And for December, we're lining up about 20,000 capacity, additional 8,000, which will be about 40 to 50 crores. And then we're actually planning the infrastructure for 30,000 units. So basically, we're looking at a phased manner expansion over the next 1 year, 1.5, 2 years.
Mr. Reddy, you mentioned that it is about execution, not so much about order inflow now. Can you give us a sense of from the order, from the time you receive the order to execution, how much time does it take in different segments? Is it different for different segments? What does it mean for working capital cycle ultimately?
See, look, the order execution, in case of fuel cells, the execution is pretty fast. It only depends on getting the inputs in place, the capacities in place, and ramping up to that kind of a level, right? So we are working on that. A lot of training is going on within the company. You must have seen in the current quarter itself what we have done. The next quarter, we are doing even much higher volumes compared to the previous quarter. So it's a stage-wise improvement in terms of the ramp plan that we are looking at. So that's where we are. And so that's how we're going to achieve more and more capacity and execution quarter-on-quarter basis to cater to the demand that we have today.
Okay, Mr. Reddy, understood that. Going forward, what is the ideal order book mix for you, especially in terms of clean energy, in terms of nuclear, which will help you garner the highest EBITDA margins? And if you could at least give us a ballpark figure for the order inflow that one can expect when it comes to FY27.
So we're looking at, it's an approximate number, but
Sure.
we're looking at close to about at least 2,000 crores or more of orders, which will kick in during the next financial year or even much higher than that. So it's a rough number, but we're looking at much higher number than that.
Okay. All right. Thank you so much, Mr. Reddy, for joining in today and giving us an outlook on the business and the order book and the order inflow that the company is expecting as well. With that, we'll slip into a short break. When we come back, we'll get chatting with the management of Aeroflex Industries on their Q3 results on the other side. Stay tuned for that.
Welcome back to Mid-Cap Radar. Well, a mild recovery as far as the markets are concerned. The small cap index managing to see quite a bit of a sharp recovery in that. Well, the next management joining us on the show is Aeroflex Industries. The company's Q3 revenue grew 21%, while its margin came in at 22.9%. To discuss how the quarter was and what lies ahead, let's welcome Asad Daud, MD of Aeroflex Industries. Well, thank you so much, Asad, for joining us. First up, when you met us last time around, you spoke to us that you should be able to go ahead and achieve a mid-teens revenue growth as far as FY26 is concerned. 9 months, you're standing at 11%. Q4, do you expect the heavy lifting to be done, or do you expect a certain a spill across to Q1 of FY27?
So first of all, thank you so much for having me here. We stick to our, as I informed last time, that we'll be having a mid-teens growth in terms of the top line. The Q1 for us was very bad, and hence if you see the last quarter, we have grown at almost 20%. So we'll be hoping to continue the same in the near future as well.
Okay, so you stick to your mid-teens revenue growth for FY26. What about margins? You had indicated 21 to 22%. Do you stick to that? And now we are almost towards the end of this fiscal. What is the ordering activity looking like, if you have any visibility for FY27 as well in terms of growth?
So yes, in terms of our margins also for this financial year, we would be in the range of around 22% EBITDA margins. And in terms of the EBITDA growth, we'll be hoping to achieve EBITDA growth as compared to last year of at least 25%. And looking forward for the next year also with the kind of capacities that are coming up, we would expect our margins to grow by at least 25% in the next financial year as well.
Okay, so you expect margins of 25% or you expect EBITDA to increase by 25% in the next fiscal? I'm a little confused there.
Yeah, EBITDA to increase by 25%. The margins would be in the range of 22 to 23% over the next year.
Okay. You did a fundraising activity, late last year. Have you deployed the funds? And also, you've entered what is also a very highly competitive cooling industry as far as data center is concerned, although a very highly growing one. Give us a sense of what kind of top-line contribution, that can give for you in Q4, if you've already started supplying, and FY27, what are your targets there?
So in terms of the liquid cooling, right, I think it's a very nascent industry still in India, where we have just started to see this, come up, and we are among the first movers in this industry. So we see a huge potential in this business. We have just started from the last month onwards to start dispatch of our skid assemblies for the liquid cooling. And we expect that this business over the next couple of years would contribute a significant portion to our overall revenue. So we are extremely bullish on this particular segment right now.
Okay. Asad, you are bullish on this one. Give us a sense of by when do you see commissioning here? When will revenue start coming in? What is the TAM that you're addressing?
In terms of the overall liquid cooling worldwide market, it is right now at about 3 billion, is probably expected to grow at around 30 to 35% CAGR to almost 21 billion. So that's the global TAM that we have. Obviously, right now we'll be serving to our customers based in India. But over the next year or so, we will be expanding the same in the international market as well. And this is a big business opportunity that we have entered into. We have already started the dispatches of the first orders, and we have already seen more orders coming in now. And I think you will see a lot of our sales growth over the next year also being contributed by the skid assemblies.
Any initial estimates of how much it would contribute?
It would be difficult to give an estimate, but like I said, over the next few years, I think this business could contribute almost 30% to our overall revenue.
Okay, Asad, one last question, quick one at that. Currently you're working with a run rate, top line run rate, last 12 months of a little over 450 crore. Next 3 years, can you reach the 1,000 crore mark? So 35% coming in from the liquid cooling and the remainder from hose and assemblies. Is that a broad number we could work with?
Yes, that's the target that we have, that over the next 3 years, 3 to 4 years, we would aim to achieve the 1,000 crore top line mark with all of the expansions that are currently ongoing, and also that is we plan to do in the future as well.
So FY29, 1,000 crore top line, 700, 750 crore coming in from the original hose and assemblies, and the other 300, 350 crore on an expanded capacity. What kind of capacity utilization are you factoring in for that particular guidance?
We are looking at a capacity utilization of about 75 to 80%, on a rough estimate basis. So yes, our target is over the next 3 years to achieve that milestone. Along with that, also our target remains in terms of EBITDA as well. So the top line for us obviously is important, but even the bottom line is as important as the top line. So our target would also be to achieve the EBITDA margins at that particular scale to about 24 to 25%.
Take that point. Asad, last question before we let you go. There's so much happening globally. You do have a sizable global exposure as well. Any positive outcome from the EU, India, FTA, and what's happening globally currently when it comes to your demand for your products?
So if you see in the last quarter, we had more than a 30% increase in our sales from the European market. And, we feel with the EU FTA agreement in place, I think we'll see the next couple of years, we'll see a significant growth coming in from the EU, which over the past 3 to 4 years was almost stagnant. So we are extremely positive on this particular trade deal.
Okay, thank you so much, Asad, for joining us, giving us your view as far as how Q3 panned out and also a 3-year time horizon for hitting the 1,000 crore revenue milestone. Thanks once again. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, Premier Energy posted a good set of Q3 results with a strong order book. In fact, earlier we caught up with Vinay Rastogi, Chief Business Officer of Premier Energies, to decode their Q3 performance and capacity expansion plans. Let's listen in to bites of that conversation.
Quarter on quarter, we have delivered an increase in revenues, EBITDAs, and in fact, the net profit margin has actually increased quite substantially. And that's largely because the capacities in the quarter were unchanged. We had the same capacities. We are already running at peak capacity utilization, so the scope for improvement was much less. But what you will see going forward is as we add substantial new capacities during the year, these numbers will go up substantially, both in terms of revenues as well as profits. On the demand side, on the contrary, I would say that the demand has been actually exceptionally strong. We have seen 2 years of more than 50% annual growth. We have a total order book of about 13,700 crore rupees, and we are actually nearly sold out for the next 1 year of production. So the reality is that when customers want to place orders on us, we are not able to accept many of these orders simply because the production lines are heavily sold out. In our core business of solar module manufacturing, we are increasing our cell capacity from 3.6 right now to 10.6. So there's a big increase coming during the year. That should be completed by September in 2026 itself. On the module side, our capacity is going to go up from 5.4 to 11 gigawatts. Again, that is to be completed in the next 3 months, in fact.
Okay, all right, that's Premier Energies, but Nestle is the stock on our radar. Sharp spike in the stock price, and it's a big beat, almost around 400 crore rupees on the revenues. EBITDA is higher as well, and that's why optically the margins look lower versus the poll, but it is a strong set. There's no two ways about it because the EBITDA is largely in line, and that's why the EBITDA margins are looking lower. But the commentary is very strong. The management says they have seen strong double-digit sales growth and record turnover, which has marked a successful quarter for Nestle India this time around. Not only that, they have seen strong expansion in rural markets, while urban performance was also best in class compared to peers. That's the commentary coming in from Nestle management this time around. A top-down beat, of course, this time where net profit has increased 46% on a YY basis to come in at 1,018 crore rupees versus a poll of 745 crore rupees. So it's a big beat, almost a 300 crore rupee on the bottom line. This also after the impact of course, labor codes and other adjustments that the company has made. But we'll see if we can get Mangalam in for a quick analysis on this one. But for now, on the back of these numbers, it's a sharp spike on Nestle India. The stock is up 3.5%.
That's right. The key to watch out for, of course, will be the volume growth. So we were watching a volume growth of somewhere in the range of 6 to 8% growth in the domestic business, 11 to 13% growth seen in exports. Revenues, of course, the handsome beat. On the back of that, you're seeing a sharp spike up. EBITDA appears to be in line with the estimates, but we will need to wait and watch as to whether Nestle has taken, the one-time hit of the labor code and whether that has had an impact on the EBITDA, especially when you're looking at Maruti. That's what they did. Profitability too largely in line. When you're comparing it against a 10% top-line growth that we were anticipating, we actually saw a high double-digit growth is what the management is saying, or a strong double-digit growth. So that is something that augurs very strong as far as...
It's also aided by a one-time gain of 158 crore rupees. What it is and what has led to this, and that's why that big beat of 400 crore rupees on profits is what we are seeing. Analyze the numbers in greater detail in just a bit, and we'll get Mangalam to analyze it for you as well. But for now, that's all we have on Midcap Radar today. But your stocks when we return.